Okay, let's talk about the Toronto housing market. Trying to figure out what's actually going on in November 2025 is, well, it's a challenge, isn't it? You read one report and it says the market is finally stabilizing. You read another and it sounds like it's about to fall off a cliff. So, what's the real story? We're going to dive into the data and see if we can find some clarity behind all these contradictions. And that really is the big question on everyone's mind. Are we looking at the first green shoots of a recovery, or is this just the quiet before a much bigger storm? The wild part is the data seems to support both arguments at the same time. It all just depends on how you look at it. And this right here just nails the problem. On one side, you have headlines celebrating signs of stability. On the other, you've got analysis saying the market has shattered hopes of a turnaround. I mean, these aren't just slightly different takes. They are fundamentally opposite conclusions drawn from the very same set of numbers. So, to unpack all of this, we're going to look at the market through three completely different lenses. We've got the optimistic view from a real estate brokerage, a more cautious and measured market update, and then a deeply bearish view from an independent analyst. And here's the really fascinating part. All three of these sources, they're working from the exact same playbook. The core data from the Toronto Regional Real Estate Board. The sales figures, the prices, the number of listings, they all agree on the raw numbers. The disagreement, the entire contradiction, is purely in how they interpret what those numbers mean.
All right, so let's jump into our first key metric, sales volume. Is the recent slowdown just a little dip in activity, a sign of a healthier, more balanced market, or is it a sign of a much more serious drop in demand?
Let's start with the hard number. In October, 6,138 homes were sold across the Greater Toronto Area. But, a number like that is pretty meaningless by itself. It needs context.
And when you put it in context, you see that's actually a 9.5% drop in sales compared to this time last year, so fewer homes are changing hands. Is that a bad thing? Well, it completely depends on who you ask.
So here's the optimistic view from Stephanie D'Souza and Associates. They frame this as a positive. They argue that, yes, sales are down year over year, but the market's tone isn't negative because activity has just steadied. They see it as a sign that things are more balanced, less frantic. But then you flip the coin and you get this analysis from Better Dwellings. And they put that 9.5% dip in a much, much harsher light. They point out that if you ignore the weird pandemic years, you have to go all the way back to the 2008 financial crisis to find an October with fewer sales. So from their perspective, this isn't stabilization, this is one of the weakest sales months on record. Okay, so the sales numbers are complicated. What about prices? Well, this is where it gets even more confusing because you'll see totally different numbers being reported. So have prices finally found a firm floor, or are they actually in a free fall? You've probably seen both of these numbers floating around. The average price, which is down 7.2%, and the benchmark price, down 5.0%. Now, the average price can be tricky. It can get totally skewed if a few super expensive or super cheap homes sell in 1 month. And that's why most analysts prefer to use the benchmark price to see what's really going on. So the benchmark price, or HPI, isn't just a simple average. Think of it as the price for a typical or cookie-cutter home in an area. It helps strip out the noise and track the underlying price trend way more accurately. And yeah, both are falling year over year, but that benchmark gives us a much clearer picture. And when we use that more accurate benchmark price and zoom out to the bigger picture, wow, the drop is just staggering. Prices for a typical home in the GTA are now down 25.4% from the peak back in 2022. To put a dollar figure on it, that's a drop of over $325,000 on the value of a typical home. So with a number like that, how can anyone possibly be optimistic? Well, the positive spin focuses on the short-term, the month-over-month change. The argument here is that while prices are way down from last year, they were essentially flat from September to October. This suggests the bleeding has stopped, that prices have finally found a stable floor. But, as you might guess, the bearish take sees that exact same data completely differently. They see a fifth consecutive month of decline, pushing prices to their lowest point in over 4 years. For them, this isn't a floor. It's a sustained plunge, and there's no end in sight. All right, let's move on to the final piece of this core puzzle, inventory. The number of homes for sale is just skyrocketing. And again, this is either a good thing, meaning way more choice for buyers, or a very, very bad thing, meaning way too much supply for really weak demand. The number of listings is, honestly, it's wild. Over 27,000 homes were for sale in October. That is the highest number for that month ever recorded. Ever. And as you can see here, that's a 17.2% jump from just 1 year ago. What's happening is pretty clear. Sellers are rushing for the exits right at the same time that buyers are hitting the brakes, and that's creating a massive imbalance. And nowhere is this imbalance more obvious than in the condo market. That's really its own separate story of pressure and distress right now, a market within a market. This table kind of breaks it all down. You've got 3 different stories playing out at once. First, the pre-construction segment. It's in an absolute crisis. We're talking 22,000 unsold units, projects being canceled left and right. Then there's the resale market. It's more stable, but that's really only good news for buyers. There are 6 months of inventory, and prices are down 22% from the peak. And finally, those really small units, under 500 square feet, they're seeing the weakest demand and the sharpest price drops of all. But here's the crazy part. The real paradox in all of this. Today's crisis in pre-construction, with all these developers halting their projects, is setting the stage for a massive supply shortage down the road, around 2028, when those units were supposed to be finished. This could cause a dramatic spike in prices in just a couple of years. So, we've looked at the sales, the prices, and the inventory. The market is clearly at a fork in the road. Now let's boil all of this down. What does this actually mean for you? Okay, for buyers, especially if you're financially stable, this is a moment of real opportunity. You have more choice than you've had in years, you have real negotiating power, and way less competition. But for sellers, it's a much tougher world out there. Competition is stiff, which means pricing your home realistically from day one is absolutely critical. Good, well-maintained homes are still selling, but anything that's overpriced is just sitting there. And that leaves us with the ultimate billion-dollar question. We have record-high inventory and historically weak sales. So will the recent interest rate cuts be enough to spark demand and get buyers back in the game to absorb all these listings? Or are we in a standoff where sellers will be forced to lower their prices even further before the market finally finds its balance? That is the question that will define Toronto real estate as we head into 2026.